Dear students, welcome to the business classes. Today we are going to deal with lending by banks. Lending means giving loans. The main business of banking company is to lend funds. The major portion of banks' funds is employed by way of loans and advances. But before lending any kind of loan, the bank has to keep in mind the following principles. The three main principles are safety, liquidity, and profitability. Along with those, there are some more principles which are very essential, which are: what is the purpose of the loan? Then what do you mean by diversification of risks? Technical competence, managerial ability, security, assured repayment, marketability, social objectives, and quantum of finance. All these principles are very essential, and the bank has to keep in mind or has to make sure that all these principles are met before any loan is to be sanctioned to any person or institution. The first principle speaks about safety. Safety means borrower's capacity to repay the loan. The bank has to see whether the borrower can repay the loan or not. This is a very big risk. His repayment depends upon the capacity to pay, willingness to pay, and collateral security offered. Honesty and character play a very essential role in repayment of the loans. Security given against the loan must be worthwhile for recovery of the loan. Then comes the principle of liquidity. Banks are the intermediaries for short-term funds. Loans are payable on demand. Banks must make sure that the borrower is able to repay the loan on demand or within the stipulated period of time. The recovery of loans depend upon the nature of assets owned by the borrower. Therefore, liquidity is an important aspect of recovery of loans. Then comes profitability. All banks are profit-earning institutions. Banks must invest their funds profitably. They need this profit to pay the interest on deposits of the depositors. They need money to pay the salaries of their staff. They also need income to various other establishment needs. They also need funds to distribute dividend to the shareholders. The main principle of lending is not to sacrifice safety and liquidity for the sake of higher profitability. So therefore, the banks have to be very alert before giving any loan. The bank has to see how much profit the bank will get while lending the money. While advancing, the concept of 3 C's have to be kept in mind. That is the capital, capacity, and character of the borrower. Next principle speaks about loan purposes. The purpose of loan is one of the most important considerations for the bank. The banks have to begin to give loans, to start small trades, to lessen unemployment problems. So the banks have to keep in mind to whom the loan is to be given and what is the priority set by the national authority, that is the government of India. So here in this picture we can see some of the examples of small scale industries in which the banks may take interest and give loans to these people so that the unemployment problem gets solved. Next is the diversification of risk. Banks do take care while advancing loans. They also accept tangible assets as securities. But sometimes the value of such property may fall due to depression or natural calamities. Now, this may frustrate the repayment of loans. The banks will not be able to recover. Now, because of this, the banks often diversify their loans in different sections or regions. They follow the principle which is called as do not keep all the eggs in one basket. If you keep all the eggs in one basket, it may crash down. Okay, and only one basket cannot hold so much. So they need to invest their funds in different profit-making avenues. Okay, right. That's how the bank can earn profit. Next comes technical competence. The proprietor or the partners should be technically qualified persons. Now, this is something to do with the business or a production unit in which the proprietor, the owner, should be technically sound. They should have practical experience in the concerned line of activity. This is to ensure manufacturing of goods good quality to withstand competition in the market. So unless and until the bank is made sure that the manager can manage all these things, the partner, the proprietors are highly qualified people, and the business may run in profit, then only the bank will be sure that these people are going to pay back our money with interest. Next comes managerial ability. The entrepreneur of the business should have the ability to manage the affairs of the unit in a coordinated manner. He should be capable of handling production, labor, finance, and other matters effectively. So bank has to make sure of all these things. Then only the bank can make sure that the money can get back to them with interest. Next is security. The banker calculates his risks and then lends. He insists on security to cover the risk. The security should be adequate, easily realizable, and free from encumbrances. Now, see, for example, if I'm taking loan for construction of the home or house, the bank will take away my original documents of that particular property on which I'm going to build that house. That is the security that the bank will take from me. If I don't pay the EMIs or if I don't pay the loan properly, then the bank will have every right to attest my property, take charge of my property, because the original documents are kept with them. So they may take any action that they want and recover the money. Okay. Next is assured repayment, economic viability. Bankers should lend only when there is an assurance of repayment. The project should be economically viable. Sanction of loan should be based on availability of alternative sources of repayment. That's why the banks will make inquiries with the borrowers to find out what will be the alternative income. So they will be asking about whether we have LIC policies, whether we have dividends, and whether we have any kind of other securities which are the national savings certificate, etc. Or if there is any other property that we can give as a security to the bank. Now this is to make sure that the borrower is capable of paying back the money of the bank. Unfortunately, that was not done in case of many clients of the banks like Vijay Mallya, Nirav Modi. That's why the banks are suffering now. But nothing, nobody can get away. The banks are going to take proper action, and then banks will be able to recover money. Okay, let's go ahead. Then comes marketability. Market demand of the product is an important factor. Product should be sold in profit. Bank should look into the marketing arrangements for the production to be sold. Social objectives. Bank should give the highest priority to the national interest while granting loans. Today's banks have a strong social objectives and social conscience. Banker should ensure that the money flows to the neglected areas and the weaker sections of the country and the underprivileged people as a part of national interest. So this is the social objectives that the bankers now have developed due to the cause of national interest. That's the reason India nationalized its major banks, and now we have national banks. Then comes quantum of finance. The banker should give a loan advance, which is an approximate requirement of unit after taking into consideration the following points: total cost of the project or business, then investment by the borrower, and the borrowings from other sources. Now these three categories play very important roles while granting to a particular project. Now, for example, if I want to buy a land or build a house on a particular land, so the bank will inquire about the market rate of that particular property, then what will be my income, and whether I'll be able to repay the loan. So what is the finance that we require? Okay, so the estimate of the construction has to be drawn. The engineer, the civil engineer, will estimate how much will be the cost of the production, or how much is the cost of the construction of a building, and then that estimate has to be given to the bank, and the bank will finance the 80% of whatever is required, and 20% will be invested by us. So that's how the bank will take the risk of the entire project. In short, this is how the bank will earn profits. You can see in the first picture, the investors, they deposit that money in their saving banks account, as well as they invest in fixed deposits. This is the starting point. When the clients, they come approach the bank, they start the account, and then they start depositing, saving. That money, say for example, let us take an example of 100 rupee. Okay, so the 100 rupee that has been deposited by the clients are distributed into two parts. 10% will be kept as reserves. That means those who want back the money which is deposited for them, 10% will be kept as reserves. And 90% will be for lending purpose. This money is kept for lending, like home loans, auto loans, personal loans, credit card debts, etc. Okay. After lending, the loan takers pay back EMIs. Loans, EMI, and loans with highest interest charges. Now that is this is the money which is paid back, the principal amount, and this is the profit that the banks will earn. Now, out of the money which is deposited back, paid back to the investors with the interest. Okay, so that is how the investors also get profit, and the bank also will earn profit. In this way, the banks will do their business. Lending to poor masses. Now, this is the main objective of the social control over banks and nationalization was to ensure that the banks reorient their lending policies, that the credit flows to the certain sectors of the economy in accordance with the national planning priorities, to ensure flow of credit to areas which had no access to the banking system. These sectors include agriculture, small-scale industries, exports, and small business, etc. Banks were initially unwilling to extend credit to these areas or sectors because of high risk involved. Reasons for neglect was they thought, or there was a condition in those days, that there was non-availability of tangible security. Now villagers may not own big properties, so the banks were not ready to give them the loans because of lack of security. Then doubtful repaying capacity. Since the farmer's income is uncertain, the banks thought that farmer will not be able to repay the loan which has been given to them. Okay, so there's a doubt. And then illiteracy will lend the borrowers and the lenders into trouble because they don't know how to do business with the banks. So that is one of the causes of neglect. Then restrictive land laws will also be a hindrance in lending. No rural branches, but the situation has changed today. If you can see, today's position of rural bank is different. Presently, there are about 43 regional rural banks as far as April 2020 record is concerned. Now, these are the states in which all these regional rural banks have been established for the purpose of lending to the villagers, the farmers, for the purpose of small-scale industries, etc., etc. So we have in Andhra Pradesh 4 banks, such banks, Gramin banks. Then we have Arunachal Pradesh, Assam, Bihar, Chhattisgarh, Gujarat, Haryana, Himachal Pradesh, Jammu and Kashmir, Jharkhand, Karnataka, Kerala, Madhya Pradesh. We are interested in Maharashtra. So in Maharashtra we have two kinds of rural banks. They are called as Maharashtra Gramin Bank and Vidarbha Konkan Gramin Bank. Even in Manipur, Meghalaya, Mizoram, Nagaland, Orissa have their own kind of Gramin banks. Pondicherry, Punjab, Rajasthan, Tamil Nadu, Telangana, Tripura, Uttar Pradesh, Uttarakhand, West Bengal. So these are the Gramin or village banks, branches that has been established to help rural people. Default and recovery of advances. Now, if there's a default by the borrowers, how the bank is going to deal with them. Now, this is the procedure wherein the banks will take help of many avenues that are available to recover the money. The borrowers are required to repay the loan promptly, but there may be some defaulters of repayment due to the following reasons. Diversion of borrowed money, bank money. For example, Satyam Computers Village, actually money was borrowed for doing software business, but he started investing that money into real estate business. So the main purpose of loan has been diverted. Then there is a loss of investment. Negative attitude towards prompt payment is also another cause of default. Defective banking policy and procedure in respect of inadequate scale of finance, providing ultimate finance, untimely finance, for example. Then lending to a member of defaulted joint family, lack of proper guidance and managerial efficiency, affecting political approach by defaulters. So there is a political interference while the banks are doing its recovery business. Inability to repay the dues. Natural calamities like droughts, floods, insecticides, etc. Willful default is also one of the reason why the borrower cannot repay in time. Then, if there is no recovery, there are certain procedures that banks should follow to recover the loan. Recovery of bank loans is a very essential work of a bank in order to maintain the interest of the bankers. Following are the steps of recovery. The first one is the recovery through persuasion. Always, the banks have to first contact the borrowers, find out their difficulties, find out the reasons why they are unable to pay, and then request them with some adjustments. So recovery through persuasion by way of personally contacting the customers, reminding about the repayment of EMIs, personal meeting with the borrowers to find out the reason for delay in repayment of loans. Then next step is recovery without court intervention. The banks can enforce security without legal action in the following cases: where goods are in the bank's possession as pledging. So banks can sell those goods at any time. So there is no need of any kind of court intervention. Next is where the bank holds deposits of the borrower, can exercise set-off. So whatever deposits are there with the bank can be adjusted towards the loan. So there is no need to file recovery proceedings in the court. Where the bank holds assignments on life insurance policies, bank can exercise the right to lien. If a bank is a mortgagee, it has got right to private sale of that particular property. Compromise with the borrowers. Compromise may be called as a negotiated settlement. In this type of recovery, borrower agrees to pay a certain amount. This is in view of reducing the non-performing assets (NPAs). It is the best method of recycling of funds instead of resorting to expensive recovery proceedings. Efforts of legal action. If the reasonable settlement is not possible, if the settlement fails, it is better to recover the loan by filing a suit in the court of law. Debt Recovery Tribunal. Now there is another procedure where the banks can recover the debts. The Government of India enacted the Recovery of Debts Due to Bank and Financial Institutions Act 1993 for settling up the Debts Recovery Tribunal. Setting up of Debt Recovery Tribunal. So there is a tribunal in which the bank can approach, and then that tribunal can take action against the defaulters. The Debt Recovery Tribunal have been set up in various states. The Appellate Tribunal has been set up in Mumbai. Recovery under Securities Act is one more act, the Securitization and Reconstruction of Financial Assets and Enforcement of Securities Interest Act, which is commonly called as the Securitization Act, which allows the lenders to take over the management and attachment of assets of defaulting borrowers in order to sell them to recover their dues. In Abdul Aziz versus Punjab National Bank, it was held by the court that this act confers powers to on the creditor for enforcement of security interests without the court intervention. Now, this is in short how the bank will recover the money which has been lent by the bank to the borrower. Now, there are three main ways in which the bank can recover. The first one is persuasion. Second is without court intervention, that is compromise. And third was with the court intervention by filing case. In first case, the bank can have a personal contact and write to the borrower. Then they may also conduct regular meeting to remind about EMIs, then identification of irregularity, fails to repay the installment, analysis of irregularity, follow-up action, refacement if necessary. So all these steps have to be taken by the bank before any legal action has to be taken. So without court intervention, next step is without court intervention. So it can be compromised by way of settlement. Why compromise is needed? Because it saves time, money and power, reduces non-performing assets, cleanses of balance sheet, recycling of funds. When has to be compromised? When the defaulter has become forced defaulter. And the third category is the last resort that the bank can take is by filing a legal proceedings. Thank you so much for listening. See you in the next class. Take care.